The UK and the US are about to go into a trade pact announced by Donald Trump that expects some big news on Thursday at 10 a.m. Now, we don't know which country he was referring to, but my best guess that it is going to be the UK. This is going to be the first of the 17 targeted trade agreements between the US and its counterparties. I'm going to look into two currencies, the British pound and the US dollar, and the implications of the potential trade deal or agreement on these two currencies and, of course, the countries. To start with the good things, this potential trade deal is going to be beneficial for the markets because it reduces uncertainty for both the UK and the US. But unfortunately, I have more negative things to say because remember that this is a trade agreement or trade deal and not a friendship. So one of the parties from these negotiations will come out short, and if I have to guess, this isn't going to be the US who pays the bill. And for two reasons. The first one is that Trump is politically driven and he's looking for a political win. Therefore, the deal has to be beneficial for the US. The second thing is Keith Starmer isn't the strongest prime minister, and every single time when Labour goes into negotiation, Britain loses. At the time of making this video, we have absolutely no information about the limitations, the scope, the size, or any details about the trade agreement. But I have a feeling that when these two countries and these two leaders are going into negotiation, Britain is going to lose. So starting with the sterling, what I'm expecting is that when the details of the negotiation come out, or when they announce that yes, they have finally agreed on the terms and conditions about the trade deal between the US and the UK, there's going to be an initial upward momentum for the sterling because reduced uncertainty. But as soon as we're going to hear the details, I have a feeling that it's going to be a buy the news and a sell the fact for the sterling. So there's definitely upside for the Great British Pound, but it's going to be limited and tactical. Whereas if you look at the US, whatever the deal is going to be, I think the dollar is going to strengthen and US indices are going to rally. One thing I'm going to be 100% sure, there will be no 100% rollback of any tariffs between the US and the UK. Remember that Trump is looking for a political win, and if you look back the previous presidency of Donald Trump between 2016 and 2020, every single tariff that Trump implemented has never been rolled back. In fact, during the Biden administration, these tariffs were still in play. So as a summary, what we're going to see today, in my honest opinion, is going to be a political win for the Washington, and it's going to offer limited tangible relief for the UK exporters, unfortunately. All right, let's move down to the technical analysis. But before you do anything, get ready because today volatility is going to be higher than usual. So get some extra margin for your account and make sure you protect your capital all the time. Forex is offering a 50% deposit bonus, meaning that if you, for example, deposit $1,000, you get $500 extra deposit added to your equity. You can't withdraw this, but you can trade with it and you can withdraw the profit that you made with the deposit bonus. So it's a no-brainer. This is actually free money. Also, if you want to join the AlphaFX community, this is the last time to join at a fixed price for lifetime, £199. From next month or when the new website is ready, I'm going to change everything and there will be only a monthly only membership subscription. So if you want to join the AlphaFX community, this is your last chance to join for a fixed time, for a fixed price, for lifetime membership. Moving back into TradingView, you can see that I already pulled up the GBP USD chart. Now, I mentioned that what I'm expecting from the trade deal today is that one of the parties to come out short. And if I have to guess, it's going to be the UK because the UK is in a worse position and the US has the upper hand. And you can see that the sterling already started weakening prior to the trade deal, which is going to be announced in about 6 hours and 30 minutes from now on. So I think it will be 10 a.m. Eastern Standard Time. It's going to be 4 o'clock Central European Time and 3 o'clock UK time. You can see that looking at the price action, price already pulled below the daily and the weekly pivot. So what I'm expecting from now on is the price to wiggle around the weekly and the daily pivot, maybe do a little bit of retest, but then continue further down at the time of the announcement. So those of you who entering at a position maybe now, yes, it's definitely possible, but I'm still expecting price to move up a little bit. So I am going to enter into a front running position as we speak now. And by the way, this is the US 30 position that I was holding since yesterday from the FOMC press conference. It's running at about 165 pips of profit. We traded live the FOMC press conference and it was a huge success. So GBP USD, speaking of which, I'm going to enter with a very, very tiny 0.3 lot position. Profit target, where should it be? Well, usually it's always the previous low or previous high. That's going to be my profit target. I don't really need to set a stop loss because if you look at my position size, it's quite small considering the lot sizes I usually trade with. And because the uncertainty is still high, that we don't know the trade details or any limitations or scope or anything really, it would be quite stupid to set, for example, a tight stop loss, because I guarantee if you set a tight stop loss, you will be closed out in the next few hours. So if I had to set a stop loss, I would leave it quite wide. Moving back to trading view, you can see that the position I took on GBP USD, I'm trying to visualize it for you. So I put the stop loss at 35.130, 130, so it's quite wide, but remember this is the 4-hour time frame, and I would target the previous low. So this is kind of a swing trade, but I'm expecting more downside for the sterling if everything goes according to my bias and analysis. Remember that we don't know anything about the trade details, but I have my specific bias and ideas about what to expect based on the previous Trump negotiations and the previous or historical negotiations that Trump did in the past. So again, if you look at the chart, we have the daily and the weekly pivot. Price already pulled below the daily and the weekly pivot, and if price is below the daily and the weekly pivot, it's a sell. If it's above, then it's a buy. So GBP USD is very clear. Let me give you something else as well. How about we look at, for example, Nasdaq? Now, the trade deal is between two countries, the US and the UK. We already analyzed the sterling, and I'm expecting dollars to strengthen, and of course the indices to strengthen as well. So looking at the US 30 or the Dow Jones 30 chart, you can see that in this case the price is moving above or gravitating above the daily and the weekly pivot. So rule of thumb, if price is above the pivots, then it's a buy. So if I had to enter at a position right now, what I would do is maybe enter now with the wider stop loss, or you can wait for price to pull back to the pivots. But I think there's going to be less chance for price to pull back this deep, but it's a probability, so I'm going to leave it on the chart. But what I'm going to do is I'm going to enter into a position now. So if I enter now, I would put the stop loss wide enough, well below the daily and the weekly pivot, and I would again target the previous highs. And if you look left on the chart, you can see that for weeks and months, price have been dropping on the US indices because the tariff-related uncertainties. Now let's pull up TradingView, MetaTrader, and go to the US 30 chart, which I already have a position, and I'm going to enter with another position. The position I have is one lot. Let's do half of that. No, actually I can do one lot. Yeah, why not? So one lot, full margin, and targeting the previous highs. Let's go back to the 4-hour chart. Yes, that's it. You can see that how many previous highs and lows we have on the left side of the chart. So I would confidently target 42,300 easily, or even a little bit higher, but I think this is a reasonable target. Yeah, everything is down below. You can read it off from the chart. Remember that Forex is offering a 50% deposit bonus. Make sure to use it because it gives you extra leverage, extra margin. You can use it to your advantage. This is free money. And again, if you want to join the Alpha FX community, go to the website. This is the last time to join at a fixed price for a lifetime. Thank you so much. This is the Alpha FX.